Well, Facebook shares have dropped to a record low. We've got Ben Pimentel of MarketWatch joining us now from San Francisco. Thank you very much, Ben. This is how the mighty have fallen, I think, is how I would describe this. We just looked at the 3-month chart of Facebook there, and it's pretty bad, right? Under $20.
Yes, that's true. I mean, while Julian Assange is holed up in Ecuadorian embassy, Facebook stocks have been unleashed. They've been unlocked. And so now you have the stock falling to a record low. And there could be more. This is just the first wave of lockup expiration. There'll be another one in November where roughly about 1.3 billion shares will be made available.
1.3 billion. That's an awful lot of shares. Now, where are these shares coming from? Are these initial investors, employees? What is it?
Exactly. Those are the initial investors, including the employees. And so the first wave is today, which is about 271 million. The 1.3 billion actually is for the rest of the year, and there's another one in May next year.
So that would presumably keep downward pressure on the stock unless new buyers come in. Now, am I right in saying that this initial public offering by Facebook has been plagued by disappointment from the very get-go?
That's true. I mean, the Facebook IPO before it launched in May was being touted as one of the biggest in tech history, but it became very controversial. There have been lawsuits filed, and now the stock has been struggling. It's lost about more than about 50% of its value since its IPO price of 38. And part of it, the reason is also some questions on its prospects for growth as it competes with other internet players led by Google.
Yeah. One of the questions I know that has been raised, Ben, is how Facebook is going to do on mobile platforms and how it's going to actually bring money in through that. There are still questions out there, aren't there?
That's true. And that's actually a question for most internet players, including Google and Apple. But I guess the pressure is greater on Facebook since they now, essentially their strength is in display ads where they are going up against Google. So the question is really going forward and where they can find more growth.
Now, I know that one of the things that they've got to do is to continue to grow their earnings and their revenue as fast as they can to basically get the stock price back up. That's important in Silicon Valley for employee retention, isn't it?
That's true, especially now where there are a lot of startups, especially in social media and also in cloud computing. So they will be competing for a lot of talent in the Valley and in tech in general.
So what happens? I presume some employees are given stock options, right? Where they're struck, and if they were struck at the IPO price, well, that's $20 away from now. I mean, that's not really a motivator right now, is it, for those people?
Exactly. There's really a debate. I mean, I've talked to one analyst, Wedbush analyst, Michael Pachter, who actually is thinking that this is not really insiders selling their shares, but more the general market being swept away in what they call the media hype because of the more downbeat sentiment on the stock. So, but clearly for a lot of employees, this is, for a lot of Facebook employees, this is definitely disappointing.
Yeah, I bet it's very disappointing for them. Anyway, we'll have to leave it there. A continuing story, I am sure. Ben Pimentel of MarketWatch, and more on that story on marketwatch.com and on WSJ.com as well.